Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Good morning, everybody. Cowboy here. Got to get the audio set up, so give me just a moment to figure that out. In the meantime, we are taking a look. What are we looking at right now? Is this the euro? Okay, so I think the euro wants to roll over. We did just get the data that came out for the PPI. That's the Producer Price Index. So that actually means that we're looking at the data that came out that's inflationary, right? Or it's at least month over month, and whether or not it's gone up year over year. So let's go ahead and check that audio. Test. Apologies for that. Let's see here. Yeah, I think we should be good to go. Hopefully it sounds good. We're going to go ahead and move forward. So first, let's go ahead and take a look at the data. And today is the 14th. I'm sorry, the 13th. And PPI came out. Yeah, a bit inflationary. Wow, those are some pretty hot prints, people. 1% month over month when it was expected to be 0.3, and 1.4% month over month when it was expected to be 0.5. That's for the PPI. And then the first one was core. Either one of these is a pretty high miss. That's a big miss. And that's going to be dollar strong, right? So dollar strong news. What that basically means is there's a lot more inflation than we expected. Okay, that's what the estimates are way off. We expected a much smaller amount of inflation. And so what's going to happen is the dollar's going to get strong and things against the dollar will get weak. So if I were to go to the 5-minute chart right here, and we had, oops, let me delete that. And then I go ahead and, I got sticky keys on, give me a second. Okay. You'll see that right as that news came out that you have a pretty strong little punch down here, right? I mean, it's not as strong as I thought it would be, though. I thought this would be a lot stronger. You can see that it kind of reached down and tapped this little liquidity zone right here, but it's kind of bouncing up, which is interesting. Well, we'll have to see how it goes because that's way off. That's a big disparity between the estimated and the real. So market is not really reacting in a typical way. Usually the dollar should be getting stronger because the expectation is we're not going to cut rates. When you see a lot of inflation, usually the policy is, okay, there's a lot of inflation, so we got to hold rates high. If you hold rates high, there won't be as much inflation. Well, there was a lot of inflation. Now, when you hold rates high, assets fall against the dollar, right? And I have delayed data right now on the NASDAQ. We'll have to come back to that. But for example, against like USDJPY, that makes sense. Dollar is getting strong. Okay, that's an expectable result of that news. Now, it's not getting a whole lot stronger. It's stabbed up and it's getting pushed down, actually. So we do know Japan is protecting their currency right now. Bitcoin should be headed down. I didn't take these trades. These were just setups. And it looks like one of them looked like it was going to work okay, and then it just kind of dumped overnight. So we'll go ahead and delete these setups. Let's see here. Let me zoom out with Bitcoin. Bitcoin is acting a bit more normal in that regard. You're seeing Bitcoin start to fall. Okay. Now, with that news, you would expect to see Bitcoin fall. But I'm going to zoom out and start looking at these like from a, more of a charting standpoint and what I think is going to happen in the, not macro, but in the next like few days. It looks like Bitcoin might be breaking out of this consolidation. So I'm going to go ahead and get rid of these other looks here. And let's reassess Bitcoin today. Let's take a look at the euro. That's what we're going to look at first. So I'm going to zoom out in the euro. Actually, do I need to zoom out? Yeah, I'm going to zoom out a bit. We're going to talk about the euro. I'm going to delete some of these other data here. And, well, it certainly is in a pretty big congestion here going back to, say, the beginning of April-ish. So certainly a congestion here, kind of a weird, not a very clear place, not a very clear consolidation. But if I zoom out and I take a look at the stack, the euro is just, see, am I looking at the, yeah, that's the monthly chart. Ultimately, there is like, it was very bullish. It's kind of tiring out. And I do think what we're going to see is in a move down in this much, much grander consolidation. Okay. So this is the euro versus the dollar. And I think you got, going back to like 2025, I think we're going to see the euro eventually break out of this sort of shorter consolidation, this smaller square right here. And the bottom of this is an important number because we might find high time frame an opportunity to go long on that, which is why I've drawn that. It's because it's, bounced there several times already in the past week or two. And this could happen today. It could happen in the next, few hours, or it could happen by the end of the week. So that's an important number. We'll zoom in, right? And we'll see if we can sort of identify a trade on that. So if I were swing trading, I'd have an eye on this level down here at about 116.69, right about there. And price will probably kind of crawl down to here, and then it may bounce up. Now if it breaks downward and it does not bounce there, there should be at least a small bounce right there. Like you should be able to find a long on a low time frame. That should happen. And if it doesn't, if you don't even get a long on a low time frame, if you can't scrape out or scalp out a long right there, then that's probably going to dump pretty hard. And there are some lower levels that once it gets past there, then it's kind of like, all right, we're looking at a pretty nice short. So if it can break below 116.53, that little tricky, I'm going to zoom in on it so you can see it. If it can break below this level right there, then you're probably looking at a nice short, like a nice short. Okay. So I would expect if it did that, you're looking at a move down to here, a short that could be, I mean, it's hard to predict because we don't know what the structure looks like at that time. Okay. But you're looking at something like this, maybe a nice 3.5, 4 to 1. But if it doesn't break below that, minimally, you should be able to scrape out a long. And it might not happen until next week, might happen later this week. And then, a move up to here is reasonable, but I'd be kind of careful with that. You just have to kind of play that as it goes. But high time frame, the euro may be ready to roll over, because it has been consolidating in this area for like months, years, going back to 2025. And you just have this high sort of bull trap right there where people really, really bought hard and offloaded. And commitment of traders was showing that the dollar is growing in strength as well. And that horizon goes out several weeks. So we'll see about it. Volatility is dropping off. It's going to change direction at some point. Now, before we move on to the private live lab, I'm going to take a look at the NASDAQ. And it doesn't care, right? It just continues up. So let's go ahead and take a look at the trade that I drew out yesterday. Now, I didn't take this trade. It was just a setup. And so far, so good. Of course, I would have not entered here. I would have waited. Well, let's just say I might have entered here, but I wouldn't have entered right as it hit that line. That's not the way I do things. I had that line as kind of a guide, this blue line, what would have been an entry, right? So this was a setup. It wasn't a trade. Now, as it hit that line, I would have had eyes on it. And I probably would not have been able to enter until after, I don't catch bottoms. I don't try to bottom tick trades. It's just, that's people who try to catch the very bottom end up losing their money most of the time. It's just not realistic. But I probably would have had a trade that looked like this. And, would I have taken profit before this area? I probably would have held on at least for an extension up to here. So that's what the trade would have looked like, but I didn't see that as it happened. I did not call it out. The setup itself made sense. It was a good setup, but I didn't take the trade, certainly. So now we're kind of left with, like, what do we do, right? And I think that prior fib extension actually still is good. So let's see, a decent way to play this might be looking for a breakout above this level, this prior high, and then once that breakout happens, looking for a long up to this area. So, if price can manage to break out here, perhaps a trade that looks like this, right? That's a big if. So right now the market's kind of, it's been just irrationally exuberant. And the fact that we had this pullback here and it just ate up that pullback, everybody bought it up, tells me there's a good chance they're going to continue to push markets up, because that in the whole scheme of this move is not a big deal. A lot of people watching it yesterday were like, "Oh man, the NASDAQ it dumped, man, the market's dumping." It's like right back where it was. So we could see something like that, like very, very possibly. And it might happen today. Like it could happen, rather than what I drew, it could happen just like this. Like that. Could happen. We'll see. We'll see if it needs a couple days. We have a little bit more news coming out tomorrow. I think it's retail sales and employment data. Let's see here. Interesting that they've, let me show you this screen here. They've started to mark the unemployment claims as a low impact or a medium impact event. It's no longer a red envelope. It's interesting. But we have retail sales data. Excuse me, we got retail sales data happening. Wow, sorry guys. That 4 o'clock wake up just can make you yawn in the show sometimes. This stuff's not that boring. It's kind of boring, but you know what? That's good. You want trading to be boring, right? That's what you want. So that I think this is realistic, one of these two. Okay. And there's news tomorrow, and it might be what pushes it. So that's pretty much it for the live lab, for the public live lab. We're going to head over to the private live lab for the paid members, right? So we're going to do that. Let's see if we got a few people in there. Yeah. We're going to jump in there. If you guys have any questions, like if you have something you want me to chart on this live lab, just put it in the comments. And by the way, look in the description. There's a free algo. And it's just a quick video where I show you how I build an algo. I build it right there for you. Like you can copy it. You're gonna have to optimize it before you trade with it. But you don't want to just plug it in and be like, hey, you make sure it's gonna work. We teach you how to optimize it at algofactory.tech. All right. And it actually is the heart and soul of what could be an agentic trading bot. So that's what everybody wants to do. They want to build these agentic trading bots. And if it was that easy, everybody would do it. They would just go on and tell ChatGPT or whatever, like, hey, make me a trading bot. And I don't see anybody doing it successfully right now, not without knowing trading already. This is like with coders. The best people who can use AI to code are already coders. They know what questions to ask. So if you want to know how to do that, come to algofactory.tech, talk to us. We'll help you. We'll help you either learn how to trade manually, which a lot of people still prefer to do, and it works great. Or if you want to build a bot to trade for you, that's also an option, right? Algofactory.tech, learn how to trade like a hedge fund pro. Never forget.
Join us or die.
Just kidding, you're not going to die. We love you.